Imagine this. You hand $10,000 to an app powered by artificial intelligence and let it invest for you. No stock picking, no spreadsheets, no stress. Just set it and forget it. That's the promise of robo-advisors like Wealthfront in 2025. With just a few taps on your phone, you've got a digital financial advisor managing your money. But here's the million-dollar question. Is this truly smart investing or just another overhyped tech trend? Can Wealthfront's AI actually beat your own stock picks or even outperform a human advisor who charges a hefty fee? In this video, we're breaking it all down. How does Wealthfront really work in 2025? What kind of returns can you expect? Are there hidden fees? And most importantly, who is it actually good for? Stick around. We've got everything you need to decide if Wealthfront could be your shortcut to financial freedom or just another Silicon Valley sales pitch. So, how did it all start? Let's rewind. Not long ago, investing felt like a gated club. You needed thousands just to get in the door. And once you did, traditional financial advisors often charged 1% or more of your assets every year. That's $100 a year for every $10,000 you invest, whether your portfolio grows or not. And beyond the fees, you had to navigate confusing jargon, long meetings, and sometimes even biased advice. For beginners, it was intimidating and expensive. Then came a digital shakeup. In 2008, two Silicon Valley veterans, Andy Rachleff and Dan Carroll, were fed up with the old-school investing world. So they launched a platform called Kaching that started as a mutual fund analysis tool. But they quickly pivoted to something bigger, a fully digital wealth management platform designed to make smart investing simple, affordable, and accessible to everyone. In 2011, Wealthfront launched as one of the first fully automated investing platforms. From the start, Wealthfront's mission was clear: democratize investing. Use software to put your financial future on autopilot. No intimidating meetings. Platforms like Wealthfront and Betterment slashed fees, dropped account minimums, and opened the doors to a new generation, especially younger investors who trust tech more than traditional finance. Fast forward to 2025, Wealthfront and Betterment are fintech staples. Wealthfront alone manages over $80 billion across 1 million accounts. It's a go-to for young, tech-savvy investors who want control without complexity. Over $1 trillion in assets are now managed by Robo-Advisors in the US alone, a 10 times jump since 2017. That's not just a trend, it's a full-blown shift in how people invest. What's it actually like to use in 2025? Let's walk through the experience from signing up to managing your money on the go. Opening a Wealthfront account is 100% online. With just $500 to get started, you'll go through a quick survey-style onboarding. But this isn't just a formality, it's smart. Wealthfront asks about your risk tolerance, financial goals, investment timeline, even preferences for socially responsible investing. Then, its AI builds a custom, globally diversified portfolio tailored just for you. You can choose from account types like individual and joint taxable accounts, IRAs, 529 college savings plans, or high-yield cash accounts. Once you're in, the dashboard is clean and intuitive. Whether you are on the app, which is rated 4.8 stars by the way, or desktop, you'll see your portfolio performance, asset allocation, and progress toward goals. Behind the scenes, Wealthfront handles rebalancing, dividend reinvestment, and tax loss harvesting automatically. You don't have to do a thing unless you want to. Here's something to know. Wealthfront doesn't offer live advisors or phone support. If you need help, it's email only. For many users, especially busy professionals or tech-savvy millennials, that's a fair trade-off for a sleek, hands-off experience. You get full control without the pressure or upselling. Want to try it yourself? Check out the link in the video description to explore Wealthfront firsthand. So what exactly makes Wealthfront so powerful? Let's pop the hood and take a look. Tax optimization is one of Wealthfront's biggest selling points. While most human advisors might harvest losses once a year, Wealthfront's algorithm does it daily, scanning your portfolio for dips, selling underperformers to offset gains, and reinvesting the proceeds. In fact, Wealthfront's automated system harvested $256 million in losses for clients in 2023 alone, generating an estimated $83.4 million in tax savings that year. They claim this can add over 1% annually to your after-tax returns. For accounts over 100K, direct indexing unlocks even more precision by owning individual stocks instead of ETFs. That means more opportunities to harvest losses at the stock level. Wealthfront claims this can add up to 1.8% per year in after-tax returns, with some users seeing as much as 2.4%. And if you've got over 500K, you get access to smart beta and risk parity, sophisticated strategies once reserved for institutional investors. At the heart of Wealthfront is automation. Think of it like cruise control for your investments. The platform constantly monitors your portfolio, whether you deposit new cash, markets shift, or your investments drift off target. When that happens, your portfolio automatically rebalances. This hands-off approach helps eliminate emotional investing mistakes, like panic selling or chasing the latest hot stock, and keeps your strategy consistent 24/7. Prefer to pick your own stocks? Wealthfront now supports commission-free trading, fractional shares, and curated stock collections, like clean energy or tech disruptors. It's a great hybrid option for investors who want automation with a personal touch. Your cash is working too. Wealthfront's FDIC-insured cash account offers up to $8 million in coverage, with just $1 to open. It's designed to integrate seamlessly with your investment plan, so even your cash is earning while you sleep. Want crypto? Wealthfront offers exposure to Bitcoin and Ethereum trusts, capped at 10% of your portfolio. You can't trade crypto directly, and tax loss harvesting doesn't apply, but it's a simple way to dip your toes into digital assets. So the features sound great, but how does Wealthfront actually perform? Are the returns worth it? Wealthfront's classic portfolio, with a high-risk score of 9, has delivered an average pre-tax annual return of 8.78% since inception. That's competitive with many index funds, and it's just the beginning. What sets Wealthfront apart isn't just the return, it's what you keep. Thanks to daily tax loss harvesting, your after-tax returns can actually beat traditional index tracking. That's a big deal, especially in taxable accounts. Wealthfront charges a flat 0.25% annual advisory fee, deducted monthly. No commissions, no hidden costs. Compare that to traditional advisors, who often charge 1% or more. On a $100,000 portfolio, that's $1,000 per year with a human advisor compared to $250 per year with Wealthfront. That's a $750 difference every year, and over time, it adds up. Here's where compounding comes in. If you invested $50,000 for 10 years at a 7% annual return, Wealthfront's lower fee could net you over $6,000 more than a 1% advisor. Over 30 years, that difference balloons to more than $67,000, and that doesn't even account for tax optimization, which for many users covers or exceeds the annual advisory cost. Wealthfront is a strong contender, but is it the right fit for you? And what limitations does it have? Wealthfront shines for younger, growth-focused investors who want a modern, low-hassle way to build wealth. Think tech-savvy millennials, busy professionals, or people who prefer automation over meetings. In fact, 90% of Wealthfront users are under 45, a clear sign it's designed for those in the wealth-building phase, not those already managing millions. However, Wealthfront isn't for everyone. If you want personalized financial advice, phone or in-person support, complex tax or estate planning, or you're an active trader, Wealthfront might feel too hands-off. There are no human advisors, no phone support, and no deep strategy sessions. Everything is algorithm-driven. There are also other limitations to be aware of. Even the smartest algorithms can't foresee every economic shock, market crashes, geopolitical events, or sudden inflation. These moments test an investor's nerve. And yes, even automated investors can panic. Some users still cash out early, undermining long-term returns. Advanced features like direct indexing and smart beta require high balances, 100K, 500K plus. Wealthfront offers Bitcoin and Ethereum exposure through trust accounts, but it's limited. You can't trade crypto directly, and you don't get tax loss harvesting benefits like you do with stocks. Moreover, Wealthfront's cash accounts are solid, but they're missing some conveniences. For example, no Zelle integration, which some competitors offer for faster peer-to-peer transfers. Wealthfront is a powerful tool for the right kind of investor, especially if you're looking for low-cost, automated investing with smart tax features. But if you need a human touch or have complex financial needs, you might be better served elsewhere. What do you think? Would you trust an AI to manage your money? Let us know in the comments. And if you're curious to try Wealthfront, check out the link in the description. Let's zoom out. Is Wealthfront in 2025 a revolution in investing or just another overhyped AI promise? Wealthfront makes a strong case. With low fees, daily tax loss harvesting, and automated rebalancing, it helps you keep more of what you earn, especially in taxable accounts where every dollar saved on taxes can compound into serious gains. But let's be real, AI isn't flawless. No algorithm can predict every market shock. And while automation is powerful, it can't replace human judgment in complex situations, like estate planning, major life changes, or emotional decision-making. Some investors simply want to talk to a real person about their money, and that's okay. The world of robot advisory is evolving, and the future belongs to platforms that blend machine efficiency with human insight. A hybrid model where algorithms handle the heavy lifting, but humans step in when nuance matters. Whether you're a seasoned investor or just dipping your toes into the world of finance, one thing is clear: AI is fundamentally transforming how we invest. It's no wonder the Robo-Advisor market is projected to top $1.6 trillion in assets under management by 2025. Wealthfront isn't perfect, but for millions, it's a powerful, low-cost engine for building wealth. If you trust the process and stay the course, its automation and tax strategies can give you a real edge. Instead of guessing when to buy or sell, Wealthfront nudges you to stay the course. Rain or shine. That's a proven edge for long-term wealth building. Now it's your turn. What do you think about AI-driven investing? Have you tried platforms like Wealthfront, or are you still skeptical? Drop your experiences and questions in the comments below. I'll read everyone. And if you found this video helpful, don't forget to like, subscribe, and check out the links below to explore Wealthfront for yourself. In the world of finance, knowledge is your best investment. See you next time.